Hi, this is element 4.7 on smart finance. This is the last element video in unit 4, the introduction of the transformation of traditional industry to smart industry. This is the continuation from last week's last element, which we looked at the challenges of traditional finance. And we're going to look at what smart finance and what are the um, technologies that has spurred smart finance, and we're going to look into an example from China called Ant Financial. What are we going to hope to look at here? We want to recognize the significance of consumer insights and the C2B mindset on the innovation of products and business models. We're going to try and analyze digitalization trends of the finance industry. We are also going to recognize the importance role of e-commerce, platforms, big data, and other digital technologies in facilitating the digital transformation of traditional industries. And we're going to develop and see how China developed a digital transformation solution. So, what is smart finance? In essence, there is a growing competition in the fintech space that has forced industry-wide competition, giving greater power to consumers. Now, as we enter Industry 4.0, customers can now increasingly assume that businesses will seamlessly and be flexible enough to tie everything together in their daily businesses and lifestyle. Now, if you've ever used the phone to pay anything online or to pay anything on tapping your phone, that is what you call fintech already. Millennials are reported to be notoriously non-loyal to traditional banking practices and financial institutions, particularly with the emergence of web-based fintech competitors these days. Web-based fintech companies are providing ever more diverse and flexible solutions, offering newfound value and convenience. This means that the emergence of financial technology of fintech has caused an industry-wide shakeup, particularly for many of the major institutional corporations who have historically held monopolistic control for many decades. So you think about your Grab, you think about your ePay, your Boost, your Touch and Go wallet. These are what we call the shakeups of the digital disruptions in the digital fintech. So smart finance can be defined as the integration of smart financial technologies into personal, organizational, and institutional ecosystem in order to enhance all activities, systems, processes, and infrastructures, as well as promote financial inclusion. So, what are the definitions of what are the defining benefits of smart finance? What has it done for us? Well, smart finance is increasingly migrating to the cloud because of its benefits in providing, automating, standardizing, simplifying, customizing, managing, and maintaining most facets of our personal and business activities and infrastructure. Say something about smart finance, anything about it, overcoming lags and efficiencies instilled by legacy programs and traditional institutions. Anything that you think about finance has helped in that era. There is defining benefits, which includes convenience, providing a frictionless experience. And I will talk to you a little bit about cloud later on in terms of cloud computing. There is the access and usability, assimilating multiple sources of financial data into seamless mobile integrated dashboards. And these services provide easy and interpret, analyze, and control. And then there is the savings, reducing transaction costs, which means that there is deep artificial intelligence learning systems that can help you decide when to save and when to transact and when to buy. There is also security, looking at the blockchains later on in this slide, in this video, where they enhance trust in digital protection mechanisms for the customers. And also financial inclusion, which I'm going to explain a little bit in the next slide. So, Smart finance is enabling financial inclusion. Do you remember when I talked about in the previous video where small business loans are not freely available to many people such as farmers and other people in developing countries, because what they do is that they borrow money as cash from family and friends. So in developing countries, this is what is happening. 2 billion people are without a bank account. 10% only have a credit card, and only 21% with financing needs gets loans from financial institutions. Whereas in China, 72% of adults lack the basic knowledge of financial knowledge. 35% traditional credit reporting systems it's only 35% traditional credit reporting systems, and 23% of the total loan balance are from rural areas, which means that there is a need for this smart finance to happen within the new industry. So remember I mentioned to you about the unserved population, the unbanked, and the people that do not have a bank account. Now, smart finance tells you that you have the rural consumers, those people who have no bank accounts, reliance on cash and little restriction. And then, of course, the non-financial literates. They are the ones that want a bank account. They want to get loans. So what happens? The transaction and accounts and smart finance services actually help them to get better access to wealth creation, credit and contingency planning. So what this means is that there is banking and financial support, there is payment and remittance, there is insurance saving, there is financial education, there is e-commerce, and there is credit. And what these banks do from the technology of smart finance, they served the populations with greater financial control. So they move the unserved population to become served population for when they give out a greater financial control, security, visibility, and flexibility through financing by giving loans and small business loans like microfinance. And all this is controlled through the security using blockchain protection. Other things include investing and financial diversification. For example, greater access to financial markets like futures and bonds and all that. And smart finance also helps these populations with global financial participation, like sending money overseas, getting and sourcing for funding through crowdfunding, and paying global charities as well. And they also helped with their credit by keeping simplified record and risk management. This enables greater access to global and financial infrastructure because there is this enabling, and you have greater access to all these financial infrastructures, bankings, financial markets, retail networks, and the like. Now, smart finance has also enabled more inclusions in the global sense, which means that different stakeholders will define different financial inclusion in different ways. Now, in 2016 to 2020's China Plan for Advancing the Development for Financial Aid, financial inclusion means that they want to include all social strata and groups with appropriate valid financial services at affordable costs, based on the principle of every person has an opportunity and equality to gain the access, which means that small and micro businesses, farmers, urban poor, urban low income, impoverished groups, and even the disabled and the aged can be the focus of the financial inclusion in China. Now, the World Bank Global Financial Development in 2014 includes a basic and straightforward definition for financial inclusion, which means that the share of individuals and firms that use financial services. Whereas the Center for Financial Inclusion provides multi-dimensional vision for financial inclusion, access to full suite of financial services to everyone who can use financial services, provided with quality. which means that it must be convenient, it must be affordable, it must be suitable, and provided with dignity and client protection. The last one is the Global Partnership for Financial Inclusion, which is the GPFI, describes financial inclusion as a state in which all working adults, including those currently excluded from financial system, have an effective access to the financial system, have effective access to the following financial services. For example, credit, savings, payments, and insurance. So this means that the effective access will be defined by convenient and responsible service delivery at affordable cost to the customer and sustainable for the provider. Now, smart finance has also helped a lot of people who start up businesses through microfinancing and microlending. Now, this term of microfinancing and microlending models have empowered the masses. This guy here, his name is Muhammad Yunus, who is a Bangladeshi social entrepreneur and a banker, an economist. He won the Nobel Peace Prize for founding the Grameen Peace and Grameen Bank and pioneering the concepts of microcredits and microfinancing. Now, microfinancing is lending to the poor. Often these people are illiterate, people who have no collateral, no business experience, and who therefore cannot normally borrow from banks. But if you give them enough, you empower them by giving them a start. Because in developing world, the poor often work at home with raw materials bought with borrowed money, and their finished products often have to be sold back to the money lenders, leaving them scarcely enough after repaying the loan with interest. So what Muhammad Yunus did was he came up with an idea of founding the Grameen Bank that offers poor microfinancial services. His initiative was so well recognized that it also realized by the Alibaba through tactics in China. Now, another example of smart finance is the introduction to M-Pesa. So M-Pesa was the first mobile money provider in the world to use technology to enable financial inclusion. It was launched in Kenya in 2017 by Vodafone's Safaricom, and the original iteration of the technology was very basic. So basically, it just utilized SMS networks to enable small payments transfers between users. Pesa is a reference to the country's currency in Swahili, which means money. Pesa equals money. Today, M-Pesa empowers millions of users across Africa, empowering them with wide degree of financial services, from making bank transfers to applying for loans and accessing healthcare provisions. 30 million users across 10 countries in Kenya, including 18 million in Kenya, with 6 billion transactions alone in 2016 and 287,000 agents and businesses worldwide supporting M-Pesa. 2% of households in Kenya have been lifted out of poverty because of this, as a result of greater access to financial services. So, more about enabling financial inclusion with smart finance. There is a digitization of currency, which means a shift away from cash economies towards digital payments, which use digital ledgers to record money and transaction. There is a digitization of business, which means bringing all business activities, systems, and processes online, ideally to the cloud where possible. There is a convergence of all relevant financial data points, which means such as your banking investments, your mortgage, your superannuation, and your e-commerce accounts, bringing it all together. There is a convergence of financial and non-financial data, integrating non-related data, like something from your Fitbit, i.e. To the financial processes. So for example, insurance agencies can monitor your Fitbit data, like step counts, and optimize risk premiums. And most importantly, the provision of smart technologies has spurred the enabling of financial inclusion. So things like artificial intelligence, integrated Internet of Things that can improve accuracy and minimize costs and raise efficiencies. These have been integrated to develop new financial systems. And so, what are some of the typical examples of smart finance developments that has happened? Firstly, there is mobile payments. Look at your WeChat Alipay, or in Malaysia, you have your GrabPay and your Touch 'n Go Pay. Secondly, there is consumer loans. Coming back to the microfinance, since 2015, China has seen a five-fold rise in consumer loans to create over USD 50 billion industry today. Much of this has been driven by the rising access to consumer credit from the younger generation, which means younger people want to start their own business, which is less than 30 years old. Thirdly, there is a seamless mobile investment portfolios. Raise is an example of an Australian app that rounds up everyday purchases, for example, like $3.80 to the nearest round number and invests the difference of 20 cents into a share portfolio. Now, this provides everyday consumers with convenient access to share portfolios and a form of saving that has historically been accessible mostly to upper middle income and well-educated consumers. Fourth, bookkeeping and taxation. An example of this would be Xero. Xero is a cloud-based accounting software with built-in features that adapt to your company's bookkeeping to comply with standards of your country of operation. And finally, crowdfunding, snowball effect, crowdsourcing, GoFundMe page. Now, the snowball effect is an example of a New Zealand crowdsourcing website that operates under the slogan, "Back a Kiwi Business." Talk about the amount of unicorns that has been launched in China. By the way, in case you don't know what a unicorn is a term that is used for any businesses that has hit about 1 million gross income, profits, turnover within once they have started their business. That's the meaning of a unicorn. So, one of the best examples that I can give you is this thing called this company called Ant Financial. Now, the Ant Financial has been the epitome of smart finance in China. So, what has Ant Finance done? Ant Finance company mission is to leverage big data and smart technologies to empower financial institutions to create ecosystems that serves the SMEs and individual customers to promote financial inclusion, especially for those people who are not included in the unbanked and the unserved population. This is the ecosystem that Ant Financial has, which combines credit scoring, payment, wealth management, business and finance, continuous consumer finance, and insurance. And you can see the whole ecosystem playing out with many players within the company's ecosystem. And where does Ant Financial sit? Ant Financial sits as the main payment and financial ecosystem underneath the Alibaba ecosystem. So as long as you go into Alibaba that uses Lazada, Tmall, Taobao, and any of the entertainment systems, wholesale e-commerce, or even the consumer services, you will bet that you will be using the Ant Financial as the financial key structure to pay for all these services. So, the Ant Financial ecosystem stresses on a few things. Firstly, they stress on creating a seamless ecosystem that brings together financial institutions, customers, and SMEs. So the products and services that they give out are loans, micro-lending, payments, wealth management, risk management, insurance, investing, and financials. And the infrastructure that they create for these products and services to have transaction settlement, system platforms, AI, deep learning, big data, and financial cloud. So it is what we call as a convenient and flexible, sophisticated, secure, and sustainable support services. So how does Ant Financial enable financial inclusion and microfinance? Well, as I mentioned to you, one of the main objective of Ant Financial is to bring the world to equal opportunities. Ant Financial is dedicated in creating an open shared credit system of financial services through technological innovations and provide the consumers and small businesses with safe and convenient inclusive financial services. Ant Financial developed proprietary consumer Sesame credit systems called Zima Credit, which provides credit scores utilizing customer data points collected throughout the entire Alibaba ecosystem. Because when you shop with Alibaba, there is so much of information, and all this information is put into the system. Now, once they know about this, then they empower the businesses and entrepreneurs and individuals alike to access funding via their MyBank service by partnering with the internet bank partners, leveraging their data infrastructure, big data inputs, and cloud computing, and also intelligent algorithms, which is what they call the MyBank offering. This thing they call the 310 loan service. 3 minutes to apply, 1 second to approve, and zero human input in the decision. As of 2019, Ant Financial has provided loans for over 10 million small businesses that otherwise could not have borrowed money. So this is one of the major things that has happened. Ant Financial's Huabei or Ant Check Later feature leverages the Zima credit ratings to enable customers to pay day-to-day expenses using zero or low interest payments. So the Ant Financial Ant embodies empowering of workers and small businesses, inclusivity, that means with open arms they accept anybody that wants a loan, and perseverance and hard work, endless potential through solidarity and cooperation. I want to give you two examples of how Ant Financial has benefited people in China, in rural China, with their smart finance ecosystem. Meet Dong Ling Fang. She's a female, she's 52 years old, from Hebei province. She says that she got a 20,000 renminbi loan from Ant Financial and bought a cashmere machine to make money. Now, because of this, she managed to say that she had a wedding party for her son, and her story resounds the fact that Ant Financial does not exclude people who have the tenacity to want to make it. So they will give out loans to people who believe in themselves and believe that they are able to make a success for themselves. So even from a rural area. The other example I want to show you is Yang Deqiao. Yang Deqiao was a university student in Hubei province. Now, when he was studying, he partnered with Rural Taobao. Why? Because after coming back to Qinghe from Beijing, he partnered with Rural Taobao to solicit funds from startup plans for college students' entrepreneurship in his hometown village, because he found out that a lot of people in his hometown village didn't have the opportunity to create businesses for themselves. Now, because of what he did through Ant Financial, he was able to then convince college students to take up this fund, and now the college students have a fund that they can tap into to create and start up their own business. So with all this, you can see how traditional banks are different from MyBank in terms of self-identity, clients, minimum cost of personal loan, cost operations, personnel composition, and purpose. You notice that the purpose of my bank is different from the traditional banks. My bank's purpose is financial inclusion, making it easy for everyone to do business everywhere. Their mission has served about 10 million SMEs in 5 years. There's low operation costs, no physical outlets, no overhead costs. SMEs and individual customers, especially clients in rural areas, is where they want to serve. And their technology is their most important self-identity. Next, I want to go through with you 3 very important future applications for smart finance and what this means for smart finance. First is blockchain. In 2008, Satoshi Nakamoto invented Bitcoin, which provided the first manifestation of the underlying technology known as blockchain. Now, beyond establishing the fundamental groundwork for a decentralized global currency, blockchain technology had a plethora of other applications which promised to provide new levels of security and efficiencies to financial and other industries. Now, blockchain then became an incorruptible digital ledger of economic transactions that can be programmed to record not just about financial transactions, but virtually anything of value. Just imagine that if you were to do a financial transaction online, this will be recorded and only authorized people are allowed to see this, and they are not allowed to change any of the transaction history. So, the 4 things I want to show you about the fundamentals of concepts of blockchain is, firstly, there is a cryptographic hash, which means that any message, input, or data is converted into a unique string of numbers and letters which cannot be reversed, constructed back into their own digital message. This message is then sent to the receiver via a distributed chain of connected blocks. This is what makes it impossible for any one computer to read any given message. Secondly is the immutable ledger, which I told you nobody can change this ledger. Upon receiving each hash, each block interprets the hash to spit out new unique hashes. Removal, manipulation, or attack of any one block from that link corrupts the entire chain, such that the message becomes fundamentally corrupted and indecipherable. In other words, every node along the chain must be unmuted on for a message to be received. The third thing is the PnP network forming of a trusted system. The fundamental infrastructure of blockchain, whereby messages are not stored by any one person, but evenly distributed along the chain, makes it impossible for any one user along the chain to decipher, alter, or manipulate any of the message. So that means any message or anything that you put up on the blockchain remains there. Then the security and robustness created by this removes the requirement for a centralized authority. So it's decentralized, thus creating a trustless system. Even in the event if a hacker were to infiltrate a node in the blockchain, the network would reject them. Fourth is the consensus protocol. Before any message or hash is sent back to a new block, then each node in the existing chain needs to reach a consensus about the validity of the new block. The validation is then redefined by proof of work or proof of stake protocols. Only once all the computers of the network have reached a consensus that that new block meets the protocol, then only it will be added into the chain. So it's kind of like message sent, hashed out, it is stored as a transaction, nobody can change it, nobody owns it, and once everybody has a consensus, then that protocol will be added to the chain. That's basically what smart blockchain is. Now, blockchain has its major influence in cryptocurrencies. What's next for cryptocurrency? Now, do you remember Facebook in 2019 wanted to create a new cryptocurrency called Libra? The China government announced the rollout of a state-backed cryptocurrency again to be trialed by a small number of China's largest digital institutions. The new currency was dubbed the Digital Currency Electronic Payment, the DCEP. This is forecasted to have a variety of benefits, notably tracking economic activities to support monetary policies and decisions. But some of the financial currencies said that there is good applications for blockchain, because with more and more cryptocurrencies going out into the market, the trustless systems instilled by blockchain bypasses many of the cumbersome infrastructures and processes that inhibit the efficiency of the finance industry. The utilization of blockchain makes it infinitely more secure and efficient to send and receive personal information along the internet. And you can see some of these early most promising applications in the blockchain include these things: protecting personal information, voting, insurance claims, cross-border payments, and etc. etc. So cryptocurrency then, by their very nature, are decentralized and difficult to contain. So no one can say for sure the extent of the impact of having blockchain and cryptocurrency, globally backed cryptocurrencies in contention. What can we say is that the world is likely about to enter a new dawn of global finance with cryptocurrency, one which bypasses many of the system's checks, balances, and currency fluctuations traditional currencies are exposed to. But you have to wonder whether or not this is a good thing. And if there is no regulation, then people can also manipulate the system. Next is cloud services. Now, think of this as a supercomputer that doesn't reside on any physical location. Increasingly, we are seeing mass migration of financial service providers rushing to cloud-based systems and processes. One of the more immediate benefits is that it reduces business costs of owning, operating, and maintaining internal servers to store, manage, and maintain financial records. But this is just the tip of the iceberg. See, integrating financial data into an ERP system, for example, provides seamless and convenient integration of all functional departments because it's not compartmentalized. You get to see everything. Within a company, it is dramatically reducing the friction and raising synergies. For example, let's consider if a salesperson operating remotely. She receives an inquiry about an item she has no prior knowledge of. Without relying on the accounts department for the information, cloud technology then enables her to instantly bring up the financial guidelines surrounding that product. For example, distributor prices, RRPs, minimum orders, quantities, and so on and so forth. And if the cloud-based ERP is supported by artificial intelligence, this information may also factor in auto-calculated freight costs and quotes to any location worldwide. So she has all the information at the tip of her fingers. So what are some of the financial applications of cloud technologies? Supporting the rising gig economy by enabling people to work remotely. Assessing and sending money, receiving more conveniently by businesses and consumers. Seamlessly accessibility to a range of financial support functions and services, and seamlessly integration of previously separated financial ledgers, which means you have financial ledgers in this department, that department. Cloud services can bring them all together. Now, the next one is the important one called artificial intelligence and deep learning. What is artificial intelligence? Merriam-Webster has said that it is the ability of a machine to imitate intelligent human behavior. And Disha experts said that it is the simulation of human intelligence processes by machines, especially computer systems. These processes include learning, reasoning, and self-correction. What are some of the examples that artificial intelligence is being incorporated into technology. Automation. They establish an intelligent and efficient control center to make processes systems function automatically, like performing high volume repeating tasks, which humans may or may not be able to perform. And AI automation is different in that technologies can adapt to changing circumstances. Machine learning, enabling a computer to act without programming, which means the most renowned form of this is deep learning. You get to learn as you do more repetitively, which can be defined as the automation of predictive analysis. Then there is machine vision, programming computers to see, converting analog waveforms like UV, infrared into digital signals, just like heat sensors, scanners, and robotics. The development of robots developed to perform tasks humans are capable of, or to support them, like cobots. So, prior to deep learning, programming was always an if, then, else kind of condition. For example, if a computer clicks a button, prompts an alert, then the request will come out. But the near-term goal for AI is teaching a computer to identify which objects are an image. Take for example of a person on a bicycle, for example, like this one. Early programming logic would require that the programmer to upload to the computer every conceivable image of every bike ever made to the computer to recognize it as a bicycle. But with deep learning, computers are programmed to identify and learn from the patterns, which means, in other words, they are allowed to make mistakes. Yeah, so they get to learn while they make mistakes. So, for example, like two wheels, triangular frames, bars at the top, and it is most likely to be a bicycle. Therefore, it will be characterized as a bicycle. Now, what are some of the future applications of smart finance? For example, AI and deep learning. The typical ways is that the technology of the Industry 4.0 has a plethora of applications, amplified in collaboration with new technologies like blockchain, Internet of Things, and cloud computing. The simplest way of viewing AI is that it can perform most human tasks faster, cheaper, and more accurately with more precision and overall better humans. It enables instantaneous procurement, rationalization, analysis, and reaction to big data across expensive networks in the context of changing environments and circumstances. Globally, some reports indicate that China is actually leading the US on a number of AI-related patents and research papers. Intel is collaborating with Baidu to develop specialized computer chip for deep learning systems, but these are likely to be integrated into their dual OS home assistant device, similar to Amazon's Alexa, which has sold quite a lot already. So, what are some of the typical ways AI is being incorporated into fintech? As you can see, credit scoring, asset management, financial education, compliance, budget forecasting. So as long as AI learns how to decide what is a good loan, for example, or what is a good share for you to invest in, you can always rest assured that with deep learning and artificial intelligence, AI helps with smart finance. I'm going to give you a case study of SAP. So, what has SAP to do with smart finance? Global ERP systems provider like SAP will provide a cloud-based hosted subscription, blockchain-enabled financial support service to their clients. And this will be supported by financial teams, which operate out of decentralized regional finance centers, as well as smart technologies, which aim to automate and streamline processes and workflow possible. Think of it like a B2B e-commerce where you are working with people from different countries. So SAP has developed a number of tools to streamline different facets of their processes, such as newly implemented Deal Health Index tool. So let's, for instance, take a hypothetical scenario of an SAP salesperson who has to prepare a quote for a financial customer. Okay, remember, they are all in different locations. Now, the solution is that the customer requires, the solution that the customer requires is incredibly complex, spanning a range of products and diverse services to be rolled out across a number of dispersed geographical locations, each priced separately. Previously, for this person to prepare this quote, he would have to have a strong degree of expertise, time spent procuring, analyzing, and interpreting this information, engagement with the SAP financial team to maintain margins, a number of checks and balances as in sign off, getting people to approve things and so on and so forth. But with the smart technology that has been incorporated into SAP, the cloud integrated AI enabled DHI, Health Index, conveniently tracks the margin of any quote that is being built. Green means it is healthy. Red indicates it needs double take before being sent to actual financial review. And SAP is also developing software to support the DHI, as well as other processes with deep learning, enabled chatbots designed to support continually upskilling, which they refer to as context learning. Now, if you learn anything about B2B e-commerce, you will know that all the information is stored in one central location, and seamlessly anyone with access can get this information. So, to finish everything off, I want you to now to go to the Padlet by scanning the QR or to the website with this password. And I want you to think about how local banks can do more. Explain to me how local banks can incorporate smart finance better into our daily lives. For example, like fintech. And if you can tell me this, then you understand what smart finance can do for businesses today. Now, that concludes Unit 4. In Unit 5, you will learn about the transformation of the organization. The reason why you are learning about the transformation of the organization is because you have learned now in Unit 4 how traditional industries have changed, both in all three, like for instance, the manufacturing, the retailing, and the finance. This will then transform the organization into engaging into the digital economy. And this will sit as your final part or part 1 of your course journey, which is the digital economy. So if you understand the digital economy, you understand what is these features, understand how it has changed consumers and business, understand how it has changed traditional industries, then you will understand how it changes the entire organization and how it functions in the digital economy. Once you finish this, you will be able to then learn about how to create a digital entrepreneurship plan in Unit 6 to Unit 10. Thank you very much, and I'll see you again.